So whenever anyone thinks of starting a business, the one of the questions that pops up is what should be the form of the business, legal form. Should it be a partnership? Because more than one person, whenever more than one person start an enterprise, there are many forms. When one person starts, then there are two forms only. One is proprietorship, another is one person company. Proprietorship and one person company. When we say proprietorship and partnership, we do not call them as company. We by mistake we mention them as company, but it's an accepted tradition to say that any limited liability company that is registered with. Why this echo? Please mute if anybody is unmuted. So if any company is registered with ROC, register of companies, any enterprise is registered with ROC, that enterprise will be called company. If not, then these are firms. Now, partnership firm, proprietorship firm. But one person company is a company because it is registered and it has limited liability. That is a topic of today. So if you think of, let me clarify this once for all. Remember this, if whenever you will be starting a business, this question is definitely going to pop up, and this is one of the solutions to your predicament. You will think that what should be the percentage holding, whether the initial partners will be good to go on a long term. I'm not sure because you do not know how the partners are going to react when they will see profit or loss or maybe a lot of money coming in, etc., etc. So you may think that registering a private limited company everything becomes almost hard coded, meaning that it's very difficult to change later. You decide about percentage shareholding. Not only that, removing one co-founder from a private limited company is very difficult compared to removing from a partnership. And it is always better that you start something like a partnership so that it remains somewhat loosely bound. If you think that we are not gelling well, some partner is behaving kind of crazy, kind of throwing tantrum frequently, and you feel that it's not good for the entire team, then it is always better that you call it quit. Maybe you just liquidate the business and then start another business in another name, same business in another name. That's what IV's Techno Solution did. IV's started from IIT Kharagpur by Vikas Barai from computer science. I used to mentor them. That was quite some time back. Then when Vikas invited some employees, Vikas and another guy. So when two of them started the business, then other people were inducted. Some students actually were inducted. Then gradually moving forward, those students were taking salary. Even after graduation, they remain in the company, and then they were drawing salary. So Bikash had the understanding that they are employees, whereas these students who are graduated, they had the understanding that they are partners or say kind of shareholders. Then when they raised this issue that where are our shares, meaning we should know that we have how much holding we have. Then Bikash told them that, okay, I'll give you some ESOP, employee stock option. Then they said, what employee? We're not employee, we are founders because we are there from day one, and without us, this company cannot run. Then Bikash said, nothing doing. You guys are important, but then you are not so important that without you guys, the company will not run. Then these guys challenged that, okay, you do it without us. So the company was dissolved. And then Bikash started his own company, and other students, meaning other graduates, started their own company separately. And Bikash became very successful. In fact, I think he sold his company for 11 million or something. I don't have the exact data now. Bikash is not in touch with me. He used to be very much in touch when he used to need some some mentoring. So That's what, meaning he had this, he did not register the company at the beginning. That is how he could dissolve the enterprise very easily and then start another one. So at the beginning, there are all those issues, and normally students or maybe graduates or maybe even experienced people are in a hurry to start a company. So first thing that comes to their mind is how to register a company. They will be talking to different guys, can you help us to register the company, as if it is just like a formality. It's not a formality, it's a very important decision, because it's almost like marriage. You just cannot invite somebody and get married thinking that, okay, since we have to have something like go forward with a partner, so we just get it, and then whenever you think like, you just hit him out or something. It's very difficult. So that is why you need to know what are the advantages and disadvantages of different forms of entities. So let us move forward and see. There are these kinds of entities. Sole proprietorship, meaning proprietorship. Sole means just single person. Partnership, one person company. The first two are unlimited liability. Everything else is limited liability. And they are all companies. First two are not companies, they are firms. Of course, the joint Hindu family business is not company. Subsidiary company is a company. We'll not discuss about joint Hindu family, subsidiary companies, etc., because time is short. If anybody is interested, we can, offline we can discuss. Sole proprietorship. As the term suggests, you are the sole proprietor of an enterprise. So you start a business. It's very simple to start the business, because you don't need to talk to anybody. Just start. Identify a name, go to municipal corporation or panchayat office, get a trade license. Without a trade license, nobody under the sun can start a business anywhere, nowhere, without a trade license. Trade license meaning you get a permission to do business within the jurisdiction of a government body. And panchayat is a government body. Municipal corporation is a government body. They have the responsibility to monitor all the companies, meaning they have the responsibility to see whether any illegalities are happening. And that is why a trade license is necessary. It is their responsibility to see that everybody is doing proper business. They are not doing something untoward, something illegal, something like a terrorist organization doing some fraudulent business, or somebody doing a fraudulent means a Punji scheme where people raise money from small parties, and then someday they just close the business and run away. So to ensure these parties are there, but seldom they do that duty. They just collect the money and forget about things in most of the cases. But maybe there are places beyond my knowledge where municipal corporations are actually keeping a tab on everybody, whatever legal or illegal businesses are going on. So you just have to have this trade license, and you have to have a PAN number of your own. Your farm and your PAN number will be same, because your proprietorship firm and the proprietor are not two different individuals, two different entities. They are the same entity. Your income and the firm's income will be joined together, and then you will be filing income tax return jointly. Means in one name, not in two names. One more thing you need today is the GST registration. So it's better for some time you can do without it, but it's always better that you have a GST registration. It has been made simple, and move forward. You are good to go. In the simplest, this is the simplest form of business, because you hardly need anything, trade license can be obtained in a matter of 5 minutes. It will take only the time to reach there and apply. Over the counter, you just deposit the money, and from the same counter, you get back the trade license. It comes just like that. So matter of 5 minutes, provided the person is there at the counter. Many a times you don't find people at the counter. So the simplest form. Of course, GST requires some time. Then you need some space to start this business. So whenever you go for a trade license, they are going to ask you that show me a document for a premises in which you would like to do a business, that you legally possess this premises, meaning either on a rent agreement or you own this premises. Either way, you have to show some document that this is a you are doing the business in an authorized place, not in an unauthorized place like a footpath or somebody else's property or something. So you need to be absolutely clear about all that. But then you have unlimited liabilities. What is unlimited liabilities? I'm not going by the slides, so don't bother about what is written in the slide. Let me just complete and then we'll move forward to the partnership. Unlimited liability is like this. Suppose you start a business and say you start a business with rupees 5 lakh. Okay, you have 5 lakh rupees and you have started a business. Now after you have started the business, you thought that why don't I raise a loan from the bank, and then I can go for some growth. So you approach to the bank gave you a loan of 10 lakh rupees. So means 1 million rupees. You have 0.5 million and the bank gave you 1 million rupees. So you have 1.5 million rupees now. So you have charted a growth path and moving forward wonderfully well. But something happens in the business and then business doesn't do well. On fine morning, you find that business is kind of not doing well at all. So you default on payment of bank loan. Whenever you raise a bank loan, bank is going to give you money, not for nothing. They're going to charge interest. That is their opportunity cost, because they have to pay interest to their depositor. So if they are paying deposit, they are paying 7% interest to the depositor, bank will charge from you something like 12% or so, because there are many cost incidences. So the bank is charging you 12% interest and you have to pay that interest out of your business income. As I said, everything is to be paid out of sales. So whatever you sell, you have to pay interest, you have to pay your raw material cost, meaning that even if it's a grocery shop, you have to pay to the vendors who supplied the grocery. Other than that, you have to pay to bank, you have to pay salary, you have to pay electricity bill, you have to pay telephone bill, and many more things. Transportation is one of the major things. All these have to be paid out of your sales. So out of the sales, first thing you pay is the vendors who have supplied you the goods. Now there is bank. Bank is not going to leave you just like that. You have to pay the entire amount. So you have borrowed $1 million from the bank, 1 million rupees from the bank. Now you see that there is no profit. So you defaulted repayment. So bank comes, knock your door, and then they say that why don't you repay? You tell the bank that things are not going well. I was not well, so I kind of fell ill and I could not run the business properly. I have now restarted, but then there is a competitor next door. They found this opportunity when my shop was closed. Now I'm not making any profit. In fact, I am incurring loss every month, every day maybe. So the bank says, we don't tell this story to us. We are not here to listen to the story. We have given you the money and you have to return. What is your plan? Just tell us. Now you may tell them that, okay, give me some extra time to repay. I'll make profit and then I'll pay from the profit. Bank says, okay, fine. They restructure the loan. So bank tells you that, okay, every month your installment was say 25,000 rupees, but now because you are saying that okay, you need some time, we are reducing the installment to 10,000. That is for only 1 year. For 1 year we are reducing it to 10,000, and from next year you have to pay 20,000. Next to next year you have to pay 30,000, so that entire amount is paid within the scheduled time. But then you default again. So bank comes knocking again, and you tell them that whatever much I do, there is no profit. So go to hell. I don't pay. So you can do anything. So bank goes to court and then gets a degree. Court says that that guy has to pay because he borrowed money. He has to pay. So they court gives a decree. Decree means with the decree, bank can sell your assets. They will come and shut. They will just seal your premises. You cannot do business once the bank gets a decree. So your business is closed. Now bank will auction all your property, whatever is there. They will auction your raw material, your shop. If the shop is owned by you, they will auction everything through a auctioning. So some people or the other will buy those, and this will be bought on a distress basis, meaning that you are at distress. So they will not pay proper price. Suppose the whole thing is valued maybe $1 million, but people will not pay $1 million. They can buy goods worth $1 million from normal people. Now you're at distress, so they will not pay you 1 million. What they are going to pay you is something like 0.5 million, because they do not know what is there hidden. So they will say, I do not know whether these raw materials are of good quality. Maybe some of them has, exceeded the shelf life, the expiry date, etc., etc. So they are going to tell you that, meaning during the auction, nobody will quote beyond 0.5 million. You are gone. So bank will close the deal and bank will go kind of unhappy, but they have recovered 0.5 million. So they will close your, they may close the chapter, but bank will not close here, because they have recovered only 0.5 million. They're supposed to get 1 full million plus interest, maybe 1.2 million, including interest. So bank has to recover another 0.7 million. Now, bank will see what they can do. For unlimited liability enterprises, bank can lay their hands on your personal asset. So those lists will be there in the bank, because before giving loan, they will inquire how many assets you have. So bank knows that you have a residential property that is valued maybe $2 million. So they will tell the court. In fact, in the decree that the court will give, they will say that you can recover anything from anywhere, because it's a proprietorship company. Now the bank will auction your residential property. Again, they will receive something like maybe $1 million, not really 2 million, because this is at a distress. So bank may recover $1 million. They have already recovered 5 million. They need $7 million. So they will transfer the remaining 3.3 million to your account. You sold your home property that is valued 2 crore, meaning $2 million, 20 lakh, $2 million, only for 1 million, and you got 3.3 million. Bank received their 1.2 million. So this is what is unlimited liabilities, meaning if the bank cannot recover all their claims by liquidating your business asset, they can lay their hands on your personal property. In case of limited liability companies, like one person company, private limited company, LLPs, limited liability partnership, private public limited companies, bank can lay their hands only on the business property, not personal property. So imagine that there are 5 directors in a company, and maybe some directors are millionaires, some maybe not so millionaire or something, they're just kind of ordinary people. So if the default, suppose the default amount is a $10 million, so the bank will sell the company property first, and they will recover maybe out of, say bank is supposed to get 5 million, they get only 1 million. Now the bank cannot lay their hands on personal property of these millionaires directors. They have to be happy whatever they can recover by selling the property of the company. Okay, so co-founders are insulated, protected from any claim by any external agent. Whatever you do, suppose one of the 5 directors did some mischief. He tried to hack to maybe Reserve Bank of India website and their treasury account or something, and the government came heavily on you. They filed a case and he has been arrested, and they made a claim of maybe 100 crore rupees, but other directors are insulated. Nobody personally will be liable. This guy will be personally liable because he has committed a sinister mistake, means committed a fraud, for which he will be treated separately, not through the company. And if it is the company that has committed this mistake, they will not be able to lay their hands on individual directors. They can try this guy in the court of law, not just as a director but as an individual, but the company will be insulated. That is it. Now what are other advantages, disadvantages? Let us know. Okay, now one very important aspect that differentiate between proprietorship and any other thing is the tax implication. Tax implication in proprietorship firm, here is the case. meaning your income as a proprietor and the income of the business are not different. If you are earning a salary of maybe $2 million from a day job and your business is giving you a profit of say 0.5 million, then your total income becomes 2 million plus 5.5 million, that is 2.5 million. You have to pay income tax on 2.5 million based on individual tax rate, not based on corporate tax rate. Okay, this is the example that is given. Suppose the owner earns 0.6 million from sources other than the business and the profit from the business is 1.5 million in the same year, then your income tax has to be 1.5 plus 0.6, that means 2.1 million. And both will use the same PAN number. There is no differentiation between farm and the proprietor. So use the same PAN number. Unlimited liabilities, I have already given the example, so you can read. There is another example here, you can read that. So here is the example that the company asset is 0.6 million, personal asset is 0.4 million. So bank is supposed to get, suppose 1.5 million. So what they are going to do is, let me see, 1.3 million. Suppose bank is supposed to get 1.3 million, but now your company asset is 0.6 million, your personal asset is 0.4 million, together it is 1 million. So what the bank can do, they can sell everything and they have to be happy with only 1 million. They will not be able to recover the 0.3 million because there is no other asset. They cannot beat you or send you to jail and recover. They will not be able to do. There is no provision like that. So bank has to incur that loss. Okay. Other features, nothing else. Whatever I discuss, that should be good enough. But then, as I said, you don't need many licenses, but for specific businesses you need licenses. Like for example, you are running a restaurant or a food business, ready to eat food, something like that, maybe a whatever snack business, you need license from FSSAI, Food Safety and Standard Authority of India. Like if you are running a pharmacy or something, then you need food and drug license from the Food and Drug Authority. Likewise, then maybe in a shop you need fire safety. So all those are by default necessary for all the businesses. So you can very well understand the ease of starting this business. You need only trade license, business premises, GST and a PAN number. Maximum incentive. If you work hard, you get all the incentive. There is nobody to share your hard-earned money. You can maintain secrecy because there is no partner who will sabotage. Decision making is quick because you are the sole guy who is giving the decision. Sorry. And then one thing is that the life is very limited. Most important thing, if the proprietor dies, if the proprietor expires, then the business ceases to exist. There is no business if the proprietor is not there. If somebody else wants to take over, the business has to be a different business because the business is associated with the proprietor, inseparable, inextricable. So that is why they're the same. Now the proprietor is not there, it becomes a different business. Unlimited liabilities and the tax incidence. And one important factor about the tax is corporate tax at present is from 17 to 22%, whereas private tax, personal tax is something like 30%. So you are at a disadvantage. Businesses like grocery stores and all, they're all proprietorship business. Okay, this is some information I wanted to announce slightly inside the class so that latecomers also do not miss. So tomorrow, Saturday at 9 p.m. there will be a very special class to be offered by Ankur, who is a senior vice president at Nirvana Venture Advisors, then Abhishek, who is associate vice president at Nirvana Venture Advisors. Both of them will be offering the session together simultaneously so that they can make it more interactively, meaning they will talk among themselves and they will talk to you also. This is a great opportunity when you will get to learn from the horse's mouth, because they are the people who are evaluating not 100, not 200, not 1000, thousands of startup business plans. They evaluate and they advise to many venture capitalists, not only their own venture. Ankur had worked in many companies like venture companies. Abhishek also worked in many. So they have unlimited exposure and a practical experience, not like me who has learned things from reading books or maybe mentoring a few guys and from blogs. These are the real people. Don't miss it. To sweet coat the attendance, etc. I will give maybe 2 or 3 attendance for attending tomorrow's class, because I want that these external expert feel that they have been well listened. Otherwise, I won't be able to invite them again. So have some pity to me, to your next generation, and attend. Don't miss this, so that these people think that, wow, there is a wide audience and they're active and we should come again and again. People's time has money, has value. So they will not normally spend their time for talking to students. So please attend. Do not be absent, and don't mind my harsh word about forcing you to come. Don't mind that, because I have no other alternative, because I have experience of seeing that I invite people and some people do not join, some people do not attend. Whatever you have, you attend this, and this whatever is being discussed will form inextricable part of the syllabus. It will be compulsory part of the syllabus, and there will be question from them. So please attend and remain serious. I don't know if there will be problem in recording, so you won't get a chance to see the record. You definitely join and take note. And I will recommend that you remain prepared with questions, meaning whatever you would like to ask. Their session will be mostly what they look forward to in a startup for making investment decisions. So you can prepare the question accordingly or in any domain and then attend. Partnership is almost like proprietorship. Only difference is that it is founded by more than one person. Yeah.
Sir, in the mail it is given 7 p.m.
No, 9 p.m. I'll change it. I'll send another mail. I make so much of mistake in the mails, meaning something is there in my mind, I write something different. Even this happens while setting up question papers. That is why I try to see several times, but still mistake remains. I have become too old for doing a job. I am seriously thinking of quitting my job, because I see these mistakes happens frequently and I don't want people to suffer for my mistake. So maybe I have another 5-6 years of job, but I may actually quit any point of time. It's a very serious decision I'm going to take. Okay, even if I quit, know for a fact that I'm going to start a startup at this age, and I'll remain active. And there, nobody is going to be sufferer. I don't want any students to suffer for my mistake. Okay, now partnership is almost like proprietorship, except the fact that there are 2 persons. There are 2 differences. Remember, I'll put a question on this. There are 2 differences. One is there are more than one person, one founders, and second is the income tax of partnership firm is different from the income tax of individual partners, because individual partners will earn different amount from their personal vocation, whatever they do. Maybe somebody will have a day job, somebody will be a consultant, so they will earn their own money separately. Even someone may have a proprietorship firm separate from this partnership, so their income will be different from the income of the partnership. So here you will pay income tax at the corporate level. So your firm must have a PAN number. This is the third difference. One is more than 2 persons, 2 is different PAN number, 3 is income tax is different from individual partners. Okay, I'll move fast because most of the things have been discussed and I don't want to spill over to the next class. All that you need here, besides whatever you need for proprietorship, is a partnership deed. It's optional. You may or may not have a partnership deed. If you have a partnership deed, it can be registered. It may not be necessary to register. You can just buy a 20 rupees non-judicial stamp paper. Earlier it was 10 rupees. I'm not very sure if it is 20, but on a safer side, you just buy 20 rupees non-judicial stamp paper, draft an agreement. What should be there? What are our percentage holding? how do we distribute our profit, what are our responsibilities. Then if we ever liquidate our company or our firm, how are we going to distribute, then things like that. Whatever you foresee that we may need to, there may be some litigation at some point of time, meaning we may end up fighting with no ends. Include all of that and put it in black and white so that everybody knows his or her responsibilities and opportunities where all they can dispute. In eventualities, people will try to find loopholes and then claim whatever they want. These are human. Nobody is to be blamed for that. So that you can write on a partnership deed. If you think that this is to be registered, you can register in a separate register of business enterprises entity, government entity. I think I have the name somewhere in a slide, so I'll show you that. I don't have the exact phrase. Now, if you do not have a partnership deed and eventually you land up in court, your dispute will be resolved through Partnership Act 1932 registration. It is called Register of Firms. Advantages of partnership: ease of formation, just like proprietorship; greater capital because you have more than one partner; better judgment because you are 2-3 guys now managing; and income tax issue that I said. Disadvantage: partnership firm is also unlimited liability enterprise, meaning that if you default on anything for any particular partner's fault, if the business comes to a position where somebody make a claim which is much bigger than all the assets of the firm, then they are going to go to court, get a decree. They are going to sell your business property first. If they cannot recover their dues, they are going to sell properties of all the partners. So that is how it is, unlimited liabilities. You should be very careful about that. Now, these are partnerships are like most of the say something like real estate brokers, small services, transportation businesses, doctors clinic, attorney firm. They are mostly limited liability partnership, not just partnership. Now, this is an example I given, the same example, so don't just read them. You have already got all the information. Separate PAN numbers. Now we are in limited liability companies. Limited liability companies, as I said, nobody can touch your personal property. So if you want to start a company, an enterprise with some of your friends, and if you are a moneyed man, even though you may not have property in your own name, but bank will tell you that you are legal heirs of your dad's property, we are going to attest that, something like that. So be careful and think of starting a private limited company before long. So this is another example for limited liability company. Suppose the company borrows $1 million rupees, and bank, when they get a degree, they come to recover their dues. They can only sell your property, maybe shop that may be 0.6 million rupees worth. They cannot touch your personal property to recover the remaining 0.4 million rupees. Now, one-person company, it was floated allowed by the government through Companies Act 2013. But then there has been significant change in the current year budget that happened on 1st of February, I think 1st of February. So they have significantly modified one-person company. You should read them. All information may not be in the slide. I am asking you to read whatever has happened to one-person company in the budget. Just get updated. One-person company has just one member. Suppose you want to start a proprietorship firm. Instead of doing that, you can still think that I can register my proprietorship firm as an OPC or one-person company. That becomes a limited liability company. So suppose you think that, suppose I am an old man, now I want to start a company. I may start a proprietorship, but I have a house property, I have landed property, and then that if I default, bank will lay their hands on that and I'll deprive my son from inheritance. So all I can do is I can have a one-person company. So my personal asset will remain insulated. There can be outside director. One person start the company, there may be a nominee. I can make my son as the nominee, wife as the nominee. So in my absence, they become automatic director of the company and the one person company. Then they can engage another nominee. May or may not. It's not necessary that I must have a nominee. If I die without a nominee or without a direct alternative director, then it will go to court. Court will decide about the inheritance. There can be outside directors also, but they are not shareholder. They are just director. Main advantage is that a single individual can register. Earlier, before 2013, everybody used to think, oh my God, if I have to register a company, I have to have two more guys. I do not know whom to take. If I take somebody, that becomes a liability. What to do? I don't want to take the liability of an stranger whom I do not know so much. There was the problem. Now one can start a limited liability company by floating an OPC. Now, how to float an OPC? In fact, how to start any limited liability company is almost the same, process is same. First thing, you have to apply for digital signature of all the directors. Suppose you think that 3 of you will start a private limited company, or 1 of you think of starting a OPC. So you have to apply for directors digital signature. One person, one director, more than one person, all directors. Then step 2 is you have to apply for directors identification number. The government gives unique number to every director, so that one director working in your company cannot be another different director in a different company and he does some hera-feri and do something. So that is why every director, suppose I am a director in your company, I'll have a unique number. Then I become directors in 100 more companies, my number does not change. I have the same number, so that I can be identified by the government wherever I am doing whatever. If I do some hera-feri in one company, they will identify me and they will bar me from all my other assignments. I'll be out from all the companies wherever I am a director. Step 3, you have to apply for a name. Getting a name is very difficult. If you have ever tried to get a domain name, you definitely has experience that getting a domain name is so very difficult. You have to be very unique, otherwise obviously you don't get, but then getting unique name that has a meaning is kind of very difficult. Similarly, running a name, if you want to register a company, you cannot register the company with a name that already exists. So you have to run a search for getting the name. Decide about, they will ask for 3 names. You send the 3 names, they will try which name is available. If nothing is available, they'll come back, you have to give another 3 names. Then you prepare memorandum of articles and memorandum of association and articles of association and other required document, whatever that is. Memorandum of articles of association contains whatever business you are going to do, how you are going to do all that, meaning whatever is there, you are going to get permission around that. You won't be able to do business that is not mentioned in your MOA and AOA. That is very important. Step 5, then you apply to Ministry of Corporate Affairs and Register of Companies. Eventually, they will give you the registration and voila, you have a company, you are ready to go. Simultaneously, I should have mentioned, you should apply for GST, you should apply for PAN number, you should apply PAN number. The company has a separate PAN number. All the companies have separate PAN numbers. You have to apply for trade license as well. You need a trade license. Then you have to apply for all other licenses that are specific to the kind of business that you are doing. Salient features of an OPC. You already know that. Nevertheless, I'll just mention. OPC, company limited by shares, company limited by guarantee. There are the 2 types. Then limited by guarantee has shareholders who act as guarantor, meaning that you are not the only shareholders. Company limited by shares you are the sole person, whereas company limited by guarantee, there will be guarantors who guarantee your loans, etc. They are kind of shareholders. And that is why they guarantee that if the company fail to repay any of its liabilities, then they are going to pay. And OPC limited by shares shall comply with the following requirement. One is they must have minimum equity capital of 1 lakh. And till this budget, the maximum was 50 lakh. But now they have eliminated the maximum capital. Now unlimited capital is allowed for OPC because they want to promote OPC in a big way, because many people objected that we want to remain an OPC. At the same time, we want to bring more money as capital and more turnover. Earlier, the turnover was only 2 crore. Beyond 2 crore, if the turnover reaches beyond 2 crore, you have to automatically apply for private limited ship rather than OPC. Are not allowed to transfer the shares, are not allowed to invite public. Yeah. Other than public limited companies, no other companies or firms are allowed to invite public to apply for shares or allot shares. So this is the differences I have already discussed. Nothing big is there. So whatever is strike through, they have been modified. This is no longer these are no longer valid. Otherwise, so I should have striked the other line also above, like an OPC has to be compulsorily converted. This line also is to be strike through, strike out. They can convert, and OPC can be voluntarily converted into private limited company. And OPC can be converted into private limited after minimum of 2 years of existence. This still is valid. Now here, motivation, why should you do this? Single person, uninterrupted existence, meaning even if the single promoter expires, the business remains. It is run by the inheritor, or say nominee, or say directors, whatever other directors. Easy transferability, meaning the single person can transfer the entire shareholding to another person, and that another person becomes the owner of the company. Borrowing capacity, bank also prefers limited liability companies. Owning property, as I said, any company that is registered is referred to as a juridical person, an artificial juridical person, meaning they are not real person, but they have all the rights and privileges of an individual. Like they cannot vote. That is the only thing they cannot do. They cannot vote in the election, but they can own property. They can file a case against somebody. They can borrow money. They can repay money. They can do anything. They can take something on loan. So they behave almost like individual. That is why they are referred to as artificial juridical person. So single person company also is an artificial juridical person, and it can do all those. Transferred. Limited liability partnership is just one step away from single person company. Just like the difference between proprietorship and partnership, here also the difference is almost similar. Here there are more than one founder. There are more than one founders. So LLP, limited liability partnership, this came in 2008, and there has been subsequent amendment, not much like OPC. OPC amendment was significant. Okay, otherwise it behaves like a limited liability company. So let us see, moving forward, what I have. Private, okay, no, this is important. Sorry. So normally if you see law firms, chartered accountant firms, and say doctor, if 3, 4, 5 doctors make a team, they normally promote LLPs, limited liability partnerships. So these like partners, but then their liabilities are limited. What are the advantages over private limited? Private limited liability company has to do lot of compliances. They have to publish audited balance sheet. They have to do so much of this board meeting, etc., etc. But for LLPs, these are not applicable. Private limited company, the most preferred form of enterprises in a startup. There should be at least 2 founders or 2 directors, and the maximum can be 200. Beyond 200, if you need, then you have to convert into public limited, where there is no limit. Okay, number 1. Number 2, the liability of each member owner is limited. I don't think you need to. I need any further explanation as to what does it mean by limited liability partnership, limited liability. Suppose one of the directors does something or whatever. Meaning, if the lenders or anybody has a claim that exceeds the liquidation value of your business, they cannot lay their hands on individuals' personal properties. That is what is limited liabilities. Okay, so there are examples given here as to, yeah, suppose your company borrows, same example, 1 million, and you are at default, and they sell your property for 0.6 million, and then bank has to be happy with that. They cannot, lay their hands on your personal assets. That's the message. More importantly, continuity of existence. If one of the directors dies or all the directors die, the business remains. A new set of directors will take over, maybe legal heirs or whatever will take over. Company remains in existence. Business will go as usual. There is no disruption of business. There is no disruption of commitment. Like suppose you have signed an agreement, an MOU with IIT Kharagpur. If you are a proprietorship business, that MOU will become defunct. Remember this. I may very well put up a question on this. If you are a proprietorship firm and you have signed an agreement with IIT Kharagpur or anybody for that matter, maybe MOU. If the proprietor expires, there is no MOU because everything has gone topsy-turvy, meaning nothing exists. But if it is private limited, everything exists because the company has a perpetual life. It can go on and on. There is no limit. So that is why banks prefer, investors prefer private limited company, because you have an agreement with banks or IIT or maybe say venture capitalist. Now, if it is proprietorship and he dies, they have to just wash their hands off any possibility of getting money back, because the proprietor does not have, the moment proprietor is not there, the agreement expires. So they have no claims on the business anymore. That is gone. That is why they prefer private limited, because of life in perpetuity, number one. Number two, remember this, there is always a question on this. There is always a question on the topic that I'm just going to discuss. That is, what is that? Continuity of existence. Another is, why investors will invest in your company? Because of limited liability. Don't laugh at it immediately, because I have said so many times. Because suppose a venture capitalist invests in your company. Now a venture capitalist is a crorepati, not a crorepati, is a millionaire, maybe a billionaire. Now suppose your company does some hera-feri, something happens, some fire, or some people consumes your products and dies. Then claim will be in terms of crores of rupees. And if it is not a limited liability company, you may run away because you may not have assets worth crores. But the VCs have assets worth crores, and they are shareholders, they are directors. So they have unlimited property and all their properties will be attached. Nobody under the sun would like to do that. Even IIT, suppose you are incubating at STEP and then you are not private limited. Then suppose something happens, then IIT will be answerable to the court. If some liability arises, IIT have to pay from whatever source they want. Maybe President of India has to pay in the eventuality, or maybe some people will lose their job. Whatever that happens, President of India will have to pay. That is why investors and entities like that prefer limited liability company. But then for private limited companies, you cannot invite people to subscribe to your shares. You can do that only if it is a public limited company. If it is public limited, then there are many other advantages, like there will be a huge board and you can have professional external board members. Here also you can have professional board members. Like suppose you start a company, you can invite a professor from IIT. Suppose yours is an electrical appliances or something. You can have some IIT faculty from electrical engineering department and place him or her as a director, so that you can remunerate. At the same time, they will feel happy that I'm a director, and then they will contribute, something like that. So you can always have professional directors. They need not be co-founders. Another disadvantage is that it cannot be freely transferred. Scope of promotional fraud, this is not so important. That is why I have put it in a shaded color. These last two are not so important. These are differences between private limited and LLP. They look like same, but they are not. Maximum shareholders in case of private limited is 200, whereas in LLP there is no higher limit. There are some others. You should read them. They are very important because wherever you work, you will know either they are a private limited company or public limited. So you should know what are the privileges, advantages of being private limited and public limited. Public limited company. This is the largest, meaning the largest companies are all public limited. Not all, but majority of them are public limited. There are some partnership firm LLPs which are big, like Pricewaterhouse. Pricewaterhouse is an LLP. हेलो, चाय बाद में पीना, अभी खत्म हो रहा है. थोड़ा for the timing you mute it. You are speaking like you are doing such a huge job, earning a lot of money. It has perpetual existence or successions. Yeah, this is very important. The life is perpetual. It will go on and on and on. It will not, as I said, limited by death of anybody. So unless there is a decree from the court that company has to be dissolved, the company will never be dissolved. And there may be many cases when companies will be dissolved. For private limited, limited liability partnership, one person company or public limited company, they can always be dissolved by banks and other creditors if they go to court and get a degree. If they get a degree, your company will be dissolved. But you can challenge that in higher court, but then this is the situation. A company must have minimum of 7 members for public limited. I think I have that information in the next slide. These are the difference between public limited and private limited. Minimum capital is 5 lakh, whereas for private limited it is 2 lakh. Unlimited number of shareholders, and public limited company can invite public to subscribe to their shares. All the listed companies in Bombay stock market or national stock markets are all public limited. There is no exception. They have to be public limited. Then another difference, this is very important. If you are a private limited company, how much remuneration you can give to individual director is limited to 11% of the profit. You cannot give more remuneration to directors beyond 11% of the net profit that you make. Whereas if it is public limited, even if you incur loss, you can pay remuneration to the directors. There is no limit. You can give the entire profit as remuneration to the directors. Many companies do that, meaning they cheat the public by giving huge amount of salary to the directors, and then eventually they will be left with very little for payment of dividend. Okay, so these are very important. There are something like joint Hindu family and subsidiary company. I'll just talk about subsidiary company for a minute. This cross means that you don't have to study for exam. So subsidiary means suppose an American company wants to set up a company in India. They'll have to open a subsidiary company, meaning that it will be a subsidiary to the American company with some shareholding. Means if the American company holds all the shares of the company, it is called full subsidiary. If the American company holds only 51% of the company, this will be a majority subsidiary, meaning they hold only majority shareholder. I think there is another technical name. Let me see if I have it here. Referred to as wholly owned subsidiary, called parent company. Subsidiary may be any legal form subsidiary. So it's not necessary that a foreign company will have subsidiary. Like our company, I am part of a company called Nucleodyne Computer Systems Incorporate. Our headquarters is in Silicon Valley, but then we have a subsidiary here at STEP that is called Nucleodyne Computer Systems Private Limited. In fact, our earlier director, meaning IIT director, Professor PPC, is a shareholder. Professor Indranil Sengupta from Computer Science is a shareholder. And the main founder is from IIT Kharagpur, is from Computer Science Department, Kallol. And we are based out of Silicon Valley, as I said, and our company is doing kind of okay. We are in systems programming, we do device driver, motherboard bring up, and many more. We have some MOU with IIT Kharagpur also. We do project with Stanford Research Initiative. It's a part of Stanford University, and a professor from there is working with us. In fact, two IITians from just a second from electronics department are working in that joint project with Stanford, and we are looking for more people, but we need top-notch people, not meaning sorry for saying it that way. Actually, because we are in systems programming, we really need people with a lot of cognitive depth, not so much creativity, but a lot of cognitive depth. Now we have a subsidiary here, so it's not necessary that parent company has to be an American company or any foreign company. Suppose a good example, you take any company, say Tata Motors. Tata Motors may have 100 subsidiaries. If you look at their balance sheet, meaning annual report, you will find a list of subsidiaries. 100 is a high number, but at least I'm almost sure that Tata Motors or Tata Steel, for that matter, will have at least 25 subsidiaries, at least. It may be even beyond that. So those are called step down subsidiaries, meaning they have a parent, and these are step down babies. So the objective of this is to separate the liabilities of subsidiary companies, or to empower the management of the subsidiary companies to make their own decision, take their own call about anything, so that it operates like a profit center, and then it has its own value creation, brand creation, and things like that. Of course, they can always share a brand, but then, like Tata brand is shared by all the Tata companies, and the brand is owned by Tata Sons, not by Tata Motors or Tata Steel or anything. Okay. Then there are cooperatives. Then you can read them if you are so much interested. I'm not going into them. Factor determining forms of business. Yeah, this is important. So I'm removing the cross from here. Other crosses remain. So what should define, or what should motivate you to form a particular type of business? One is nature and size of the business. If you think that we are just a startup, we are yet to approach to any investor, and we are not going to marketplace unless we have a product ready, so why to bother about bank and other creditors, and why to unnecessarily start a private limited company? This is very important. Setting up floating a private limited company cost money, lot of money, and you should never start a private limited company immediately when the idea is in your mind. You should start a company only when you are completely under control, meaning you have the product, you are almost ready to go to market, or you are approaching to an investor. Unless you are approaching to an incubation cell or an investor or an angel or anybody on any external party for funding, you should never start, because it involves a lot of money. Registering a private limited company will require something like 35,000 rupees to 50,000 rupees, depending on where you are, how you go about it, how many times you search for the name, etc., etc. So why to invest 50,000? It looks like a peanuts as long as you don't earn. The moment you will start earning, you will find that 50,000 rupees is a lot of money, and you should not waste that money. You should start alone as a proprietor, and then when there are co-founders, start a partnership. For the time being, as long as you don't need. So you should start a private limited company when situation demands. Otherwise, you should not. Skill of operation. Then degree of control desired. If you want to control the entire business, go for a proprietorship or a partnership. If you are okay with many directors and etc., then you go for private limited. Amount of capital required. Suppose you have only 50,000 rupees as capital, you cannot think of starting private limited, because that requires at least 2 lakh rupees. The degree of risk and liabilities. If you are afraid of the risk, If you think that this is too risky, suppose you are manufacturing, say, alcohol, beverages, then there may be an occasion when you will end up killing so many people. Risk is very high. In that case, you want to go for a limited liability companies. Comparative tax liabilities, as I said, proprietorship firm has a higher tax liability. Degree of compliances from government. If you have a private limited company, degree of compliances are very huge. You have to publish audited balance sheet, this, that, etc., etc. So be very careful. So by the by, do you think that 7 o'clock makes a better proposition than 9 o'clock? Can anybody answer? I put it at 9 o'clock because I thought there it might clash with some other test. So rather than having at 7, perhaps 9 makes a sense. But then if it spills over, then it will be too late. So if you think that 7 is better, then I'll try to convince them at 7. Let me have some hand raised and then let us finalize it right away. Any opinion?
Sir, 7:30 people also have NSO classes.
Sir, 7 is
Sir,
not better.
NSO classes also there at 7.
Okay, so 9 is fine. So I'll go ahead with 9. Thank you so much. And we have to now close. Okay, 9 is good. So thank you so much. I'm stopping recording and I'm leaving because I have to